So if we go into question one, solid question, Karen. FX volatility is 8.94 on the global currency volatility chart today. That was as of last Friday. How do you use this in your notebook study? What actions, if any, did you take as a result? Thanks. So generally speaking, if we go to that next slide, guys, slide 6, the F bucket for FX vol, again, man, freaking tongue twisters this morning, is greater than 9. So basically 9 is really the number, greater than, less than. If you're greater than 9, typically assets start flowing to US dollars, right? So that's basically the F bucket is good for USD. Anything below that is good for basically kind of just global FX crosses in general, right? So it becomes basically a little bit more nuanced in regards to which crosses you want to have, which FX crosses you want to have exposure to. So with this tick down in this, as you can see, this was actually today's number. So I pulled this from the Macro Show deck. You get this every day in the Macro Show deck. It is something that I write down every day in my notebook. So to answer your question there, Karen, FX vol is absolutely one thing that I write down every day. I don't write just the number down. I write down those, General, could you kind of maybe zoom in if possible to like the day over day? Yeah, awesome, man. So I write down the day over day, the week over week, and the month over month numbers. That's perfect, man. Yeah, brilliant. Thank you. So what you can see here is day over day. We were down 3 basis points, week over week down 31 basis points, and month over month down 56 basis points, which is a negative 6.1% change from a percentage standpoint. And this is I track it along those lines. I write those numbers down each week, and what that helps me do. Sorry, I write them down each day, reviewing what those numbers are saying. And what you can see here is you picked up on a really good point, Karen, is that you have a trending volatility that is trending lower. I think one of a few reasons why Keith got out of the dollar a few weeks ago was because of this, volatility trending breakdown, basically, right? So trending lower, and with FX vol trending to the downside, that means US dollar might not kind of basically function as superbly as it did with FX vol. If you kind of, again, can we just jump back into that just a little easier? So thanks, General. As it did in 2022, when we went from basically 7 on FX vol all the way up to 13 in November, so I'm not saying that we can't get back there, and this is why I track it every day. And the US dollar certainly is picking up strength. It's gone back to bullish trade as of this week, and that's a good thing, right? And that's also very quad 4 oriented. So if we go to that next slide, General, you'll see that the US dollar shines in quad 4, right? So your quad 4 protagonist is the USD. It has a very high batting average, back tests very, very highly, 79% of the time, returns basically 1.5%. Again, those are general kind of expected values. But again, the other quads, don't typically, the US dollar doesn't typically perform very well. Now, I've said this before as well. These are back tested numbers. So that also means that there is it's a 21% kind of the time that it doesn't perform well in a quad 4 environment. But again, my point is, going back to the FX, we switch back to that up to that previous slide, guys. That's kind of how I think about things, right? So from an FX standpoint, vol under 9 means that like US dollar, the break, it's not even breakdown, but the USD typically doesn't kind of like, it starts to break down basically, right? But you're also seeing FX vol here, or like the US dollar picking up. So this is where, and you're right on the cusp at like 8.63. You're right kind of around the top end of what would be the like investable bucket for the rest of currencies, FX crosses. So again, this is like a key one. It's a great call out, Karen. And that's how I think about it. So that 9 number is definitely the number that I kind of keep track of. It is certainly trending lower at this point in time. And yeah, so when we kind of start seeing kind of a week over week move on the FX vol to the upside, certainly be paying attention, and then cross-reference that with sort of what the US dollar signal is telling you, what the risk range is telling you. We got the trade risk range, the trade level for the dollar from Keith yesterday. That was at 101.57. So again, that low end of the risk range at 101.15 is just below that, right? So it's just below that trade level. If we get to see the low end of the risk range above trade and holding it there, that's a really positive sign for the dollar. So all that is kind of how I think about FX vol, the dollar, quad 4, et cetera, et cetera. Hopefully that was helpful.